My name is Marceline Maroma from the Institute of Certified Public Accountants in Kenya. And today we're joined by FCPA Robert Waruiru to demystify some of the finance-related matters that are there in the country currently. And maybe we can start off with you introducing yourself for the ones watching, who you are, what you do, the company that you have. This is your time to shine.
Thank you very much, Marceline. My name is FCPA Robert Waruiru. I'm a tax advisor, and I work for Ichiban Tax and Business Advisory, where we advise clients on tax matters, regulatory matters, as well as just simplifying tax. That's really what we do on a day-to-day basis, Marceline.
Okay. And you're an ISPAC member in very good standing, right?
I should hope so.
Yes. Okay. So we go to our first question, and we're talking about what's the difference between budget and finance bill? Because I think we use them interchangeably, or we don't seem to understand the two.
Okay, that's a good question, Marceline. So a budget is a statement of revenues and expenditures. So that is your budget, just like you'd have your budget at home. Whereas the finance bill then sets out the principles or the steps that government will use or will undertake, for that matter, to raise revenue. So the finance bill is around revenue raising measures, whereas the budget looks at both sides of the equation. That is expenditure and the revenues.
Okay. I think of late we've experienced quite a number of tax reforms and a lot of misinformation. Maybe we can start off with what are the most significant tax reforms or compliance changes businesses should anticipate in the coming 2026-2027 finance bill?
Well, first of all, I think one of the biggest changes, Marceline, is around e-teams and the expenditure validation, because that's a really big issue, and not just in Kenya, I should say. We've seen challenges in the Middle East, we've seen challenges in Egypt, we've seen challenges in Rwanda as well. So that is a big issue, and everybody needs to be aware about the income and expense validation initiatives that are going to be taken over by Revenue Authority. Now, in terms of Finance Bill 2026-2027, the first thing that we're expecting is that this being a pre-election year, we don't expect there to be significant changes that will probably come through the Finance Bill. However, there has already been talk around reduction of the POI rates, which I think is a good thing. We've had talk about 30,000 shillings and below being subjected to tax at 0%. Probably a review of the tax bands. I think that is also long overdue. And also we've had Revenue Authority talking about pre-filing and a change around the filing, and this is driven by the e-teams expense validation, because we all need to ensure that our expenses are validated, or at least they're supported by e-teams. So in order to give Revenue Authority an opportunity to verify these expenses and this income, then there's likely to be a change in terms of the filing calendar for businesses. And we've seen that with Uganda, which has got provisional returns, for example. So it's something that we are likely to see in the finance bill, and even the tax laws amendment bill, which is likely to come up quite soon. Now, the other key change that I expect from a finance bill, tax laws amendment bill perspective is a clear administrative change to broaden the tax base. The statistics reflect something like 6.3 million people who should be paying taxes but are not paying taxes. And so that presents a big challenge, and that's the reason why you see people in the formal sector saying we feel that we are paying tax too much. And so government is saying we want to spread that burden a bit more, and so we are likely to see a lot of administrative changes, including what Revenue Authority is calling the income estimation algorithm. In other words, Revenue Authority will be able to look at your lifestyle and say, this is the kind of income that you should be reporting. Why are you not reporting that kind of income? So those are some of the changes that we expect to see from a legislative perspective.
Okay. And when we talk about tax trends globally, such as digital taxation, the ones that influence Kenya's tax landscape, what should professionals watch out for?
I think probably the Pillar 2 conversation around base erosion and profit shifting, that is a big issue because a lot of developing countries are looking at that as a significant part of the solution around domestic revenue mobilization. And so, we've seen countries like Kenya coming up with country-by-country reporting regulations, which are still in draft. We expect those ones to come out pretty soon. And so, from an international perspective, countries will start implementing some of these global solutions. Again, also digital services tax, what you talked about, which now in Kenya we are calling significant economic presence tax. So we expect that those two will feature quite prominently, as well as transfer pricing. Countries, going straight on for transfer pricing, because they think that that is where value is to be had from a revenue perspective.
Okay. A lot of what I'd call the digital economy, for example, the influencers are really feeling the pinch with the taxes that are coming in, from a place of not paying any tax to now trying to get them into the net of paying tax. What advice would you give to SMEs, influencers, entrepreneurs who are trying to navigate these new tax obligations that are coming up?
Yeah. So first of all, the obligations are not really new. It's really about this segment of taxpayers was probably not visible to Revenue Authority. But otherwise, because you are earning income from Kenya, then under Section 3 of the Income Tax Act, you are required to account for that tax. And because we live in a self-assessment regime, it is your obligation as a taxpayer to assess yourself, and then the commissioner will review your self-assessment to determine whether you fully disclose or not. So that's the issue, and that's the drive really that you hear Revenue Authority talking about, broadening that tax base. Yes. Now, for people in this sector, I think two critical things. One is make sure that you file your self-assessment, and make sure you make a full and true disclosure of that income. Number two, and very, very important, ensure that your expenses are supported by an e-Teams invoice, because that will be the fundamental point of conversation with Revenue Authority. Do you have expenses that are deductible for tax purposes? And if your expenses are not supported by an e-Teams invoice, then you have a problem. So if you disclose your income, and Revenue Authority actually may very well tell how much income you have by virtue of your withholding tax, then you need to ensure that you can support the expenses so that you can determine a fair tax obligation.
Okay. As we look ahead, how can tax practitioners balance between compliance, innovation, especially in a rapidly digitized economy?
Well, innovation, tax is dynamic, but from an innovation perspective, not that much. However, I'd say for businesses, ensuring that your records are well kept, ensuring that you can defend or you can explain your expenses and the transactions that go through your accounts, because we've seen a huge focus on by Revenue Authority on this is the income that is coming into your bank account. How do you confirm that this is not taxable income? So you've got to keep your records, and that's the bottom line. So the law also requires you to keep your records for at least 5 years. And I think it's important that people who are listening to this ensure that they maintain those records for at least 5 years, because Revenue Authority can ask you for that data. The other thing to know is Revenue Authority is looking at a lot of data. They're looking at land records, property records, expenditure records, consumption records, and so on. So it will not be too long before then Revenue Authority zeroes in on certain people who are not paying taxes. So better get ahead of the curve and comply.
Okay. Back to ISPAC, where do you see the biggest opportunity lies for ISPAC members to add value in guiding businesses through these many tax challenges and lack of information?
Yeah, that's a good one. As an ISPAC member and as ISPAC members, really it's our obligation to ensure that we update and inform the public of these developments, because an informed person, an informed taxpayer will likely comply and reduce instances of non-compliance, reduce instances of penalties and that kind of a thing. So as members of ISPAC, it is our obligation. As members of ISPAC, it is our obligation to ensure that we shape the debate from a policy perspective. We don't want a law coming in and then we're left asking ourselves, why did this pass? So we need to be at the forefront in terms of shaping that public debate and ensuring that the policy pronouncements that come through are supportive of businesses. So I think ISPAC has got a fundamental role to play, and because the name accountant is because we are accountable. So we must be accountable, not only for ourselves, not only for our businesses, but even for the future generations.
Okay. Speaking of the future, is AI taking over the accountancy profession? That's the age-old question everyone is scared.
Yeah, depends on who you want to believe, Maslin. But what I have seen, and at least based on my reading, is that for sure AI is revolutionizing how we do business. Whether it's accounting, whether it's law, whether it's merchandising, AI is here to stay, and we as accountants have to be at the forefront of this. So from a compliance perspective, I think AI will definitely shape the future in terms of tax compliance. I think as accountants, we must not be afraid of AI. What we need to do is work and optimize on AI.
Okay.
Yeah.
Okay. You've used a lot of big words during this interview, so we're getting to the demystifying part of this. So for those who missed parts of it, they can be able to catch up.